Hey everybody, how are you? Hope you're doing well. So do me a favor before we get started. I need you to hit that like button. If you're not a subscriber, I need you to do me a favor, hit that subscribe button and notification bell next to it so that you won't miss an episode. Also check me out on IG, elevation_mentor. So today we're going to answer the question, are real estate taxes deductible? So when it comes to real estate, there are a lot of tax advantages, which I am sure you are aware of that. And I'm going to name some of the deductions. There are a lot of deductions. When it comes to real estate, this is one reason why people choose the path of real estate for the tax advantages. So, to answer the question, um, hang in there with me, and I'm going to answer the question directly. But as far as the benefits go with real estate, you're able to deduct travel. Of course, it has to be associated with the property in some form or fashion. You're able to deduct travel, mortgage interest, advertising, repairs, maintenance, utilities, management fees, lock boxes, insurance, accounting fees, realtor commissions, depreciation. So there are a whole lot of deductions. I just named a few of them. So all of this is associated with being in real estate, owning real estate, and having it as investment property. So, as far as the question, are real estate taxes deductible? The answer is yes. So, property taxes are deductible along with a long list of other things that are deductible. So, again, this is one of the reasons why people choose real estate because of the tax advantages. So, when it comes to filing taxes, you can take the standard deduction, which is a flat amount, or you can choose to itemize your deductions, which will be listed on Schedule A. So you can go seek out your tax preparer for more information on that. So we're going to go over depreciation, one of the benefits of being in real estate, and depreciation. So depreciation is taking the whole value of the property that you bought. So when it comes to residential, you can depreciate this property over a period of 27.5 years. That's for residential. So I'm going to give you an example of depreciation, what depreciation looks like. All right. So say you have a $1 million property. I'm going to give you that example, and then I'm going to give you a realistic example. However, eventually 1 million will be realistic. So say you have a property that's worth 1 million. And then some people watching me, you already have that. So if you're watching me and you're already there, feel free to click on my email is below, and I'm going to bring you onto the show. All right. So say, for example, you have a $1 million property and you're interested in depreciating this property. So you're going to take the 1 million, divide that by 27 and a half years. You have $36,363 that you can write off over 27 and a half years. So what this does is it saves you money and it puts money into your pocket because you know how to use depreciation. So that's one advantage of real estate. So, okay, so let's look at $100,000 house and see what that would do. So say you have $100,000 house and you want to use this thing called depreciation that you heard about. So you have this $100,000 house You're going to divide it by 27 and a half years. Okay. Well, it's a lot smaller, isn't it? This is $3,636 that you can write off over 27 and a half years. So as you can see, it's tiny, right? But hey, it's better than nothing. And then eventually, as you grow, this is what people are talking about when they're saying that they're having so much fun, right? So you got $100,000 house. Some people are at the million, and then some people are more than the millions. And so obviously, the higher the value of the property, the more depreciation you can take. And that's just how the system works, right? You saw that drastic difference, right? 3,000 versus 36,000, right? So the higher the value of the property, the more money they allow you to save. And that's just how the system works. All right. So we're going to talk about, let's talk about cost segregation. Cost segregation and accelerated depreciation. So that is a way to depreciate faster. So for people who want depreciation at a faster rate, there is a way to get 30 to 50% of the value of this building in the first 5 to 7 years. So that's accelerated depreciation. It would allow you to get that money faster within 5 to 7 years, as opposed to 27 and a half years. And the 27 and a half years, that's for residential. Commercial is more like 39 years, right? And you can feel free to, talk to your tax professional if you're interested in depreciation, accelerated depreciation. And then we're going to talk about cost segregation. So there is a tax loophole, and they allowed the tax loophole is for people that are in short-term rentals. So there's 2 requirements to meet this tax loophole when it comes to short-term rentals. So you have to have an average stay of 7 days for your guests, and then you have to work 100 hours in that year to meet the qualifications, right? 100 hours managing the property. So those are the 2 requirements to get this tax loophole that they have for short-term rentals. So I'm going to give you an example of this cost segregation that they allow with short-term rentals. All right, so first let's do the unrealistic, which will eventually become realistic if you stay in the game. So say you have a $500,000 property, and you want to use this tax loophole that you heard about called cost segregation. So they will allow you to take 20% of the value of this home. So let's take, if you got a 500,000 home, multiply that by 20%, that's 100,000. So say you work a job that makes 100,000. So what this tax loophole does is you could take the 100,000 that you make from your W-2 and subtract this number that you came up with, the cost segregation, 100,000 minus 100,000. And this is how much you pay on taxes. And so this is what some people are doing when it comes to real estate. They're taking advantage of these tax loopholes. And this is called cost segregation. It's for people that are in short-term rentals, and you do have to meet those 2 rules that I mentioned. All right. All right. So let's give a realistic number. All right. And The other numbers, they will become realistic if you stay in it long enough. All right. So say you have $100,000 property. And you want to use this cost segregation that you heard about. So you can get 20% off of the value of the home. That's $20,000. So say you have a $100,000 job. You make $100,000 at your job. So you take 100,000 minus the 20,000 that you got from cost segregation. So instead of being taxed on that $100,000, you're getting taxed on $80,000. So if you're in the short-term rental space, it saves you money and puts more money in your pocket. You're being taxed off at $80,000 instead of $20,000. And that is how the gist of the cost segregation tax loophole works. All right. So to reiterate, are real estate taxes deductible? Answer is yes. You get a lot of deductions, a whole lot of deductions with real estate, and that's one of the reasons why people are in it. All right. So feel free to seek out your tax professional for more information as far as the deductions go and as far as your real estate journey. All right. So do me a favor before you leave. I need you to hit that like button. What that does is it helps the channel grow. It'll get it out to the YouTube world. If you're not a subscriber, I need for you to do me a favor, hit that subscribe button and notification bell next to it so that you won't miss an episode. Also, feel free to leave your comments below, your thoughts, your opinions. Men, you know the deal, right? You know the deal. You already know what I'm going to say. So check out the pin link below and check out what I have for you. And read the words that are written. And then maybe the more times you see it, maybe maybe you'll think about it. So check out the pin link below, men. All right. So for anyone who's interested in buying property, check out the other link and join the wait list for the real estate group. All right. You'll be with a community of people that are doing the same thing you're doing, buying property, buying assets, building wealth, getting out of this struggle bus mentality, having a prosperous future, a worry-free retirement, and maybe even a little extra time to do the things that you want to do with your life. What do you want to do? Would you like to pursue some passions, take up some hobbies, spend time with your family, travel? Well, real estate will help you do that. Unfortunately, this has been a secret for a long, long, long time. But now it's not a secret anymore because we have the internet. With the internet, you can see everything. You see everything that people are doing. So I'm sure there's still secrets out here. There's still secrets. They don't want everybody out here being rich, right? Everybody can't be rich. They can't have that. But we can see bits and pieces. We can see bits and pieces. All right. And this is one of the pathways to wealth. And there are a whole lot of different pathways. All right. So if you're interested, check out the link below and join the community. All right. Thank you for watching, everyone. I will see you next time. Bye for now.